You see a lot of interesting moves in the world of corporate finance, but something that's really caught my eye lately is this growing trend of companies holding significant amounts of Bitcoin. It feels a bit like the Wild West meets the Fortune 500, doesn't it?
It certainly does. It raises eyebrows and prompts fundamental rethinking, really, of what constitutes a modern corporate treasury strategy.
Absolutely. And that brings us to what we've been digging into today. MicroStrategy's very deliberate and, well, very public embrace of Bitcoin.
Yeah.
Is this a visionary masterstroke, the financial equivalent of a hole-in-one?
Yeah.
Or is there more to unpack beneath the surface?
Right.
To figure this out, we've gone through a fascinating stack of material.
Yeah.
A Reddit discussion that kind of got the ball rolling for me. News articles filled with expert takes. A YouTube sit-down with MicroStrategy's main guy.
Michael Saylor. Yeah.
A compelling argument from Strive Asset Management pushing for Bitcoin in corporate coffers. And, of course, MicroStrategy's own financial reports.
It's a pretty comprehensive set of viewpoints, which is essential when you're examining something as, well, unconventional as this.
Our mission today is to really dissect this strategy. We want to understand the why behind MicroStrategy's big Bitcoin bet, what the potential upsides and, crucially, the downsides could be.
Mm-hmm.
And ultimately, whether this could be a signal for other companies trying to navigate today's economic waters. Okay, so let's dive right in. MicroStrategy's core strategy. It actually started with a pretty basic question I saw in a Reddit thread. Wait, are these guys just buying a mountain of Bitcoin with the cash they get from selling their own stock?
Yeah.
That seemingly simple question actually unlocks this whole fascinating strategy.
It does. That initial, almost naive question gets right to the heart of it. The idea of exchanging one asset, their own company shares, which, some might argue are richly valued.
Right.
For another, they believe has far greater long-term growth potential, which is Bitcoin.
Exactly. One commenter in that thread put it very plainly. They're trading a lesser asset for a greater asset, aiming to accumulate what they declared to be the hardest asset in the history of the world.
Wow.
Pretty emphatic stuff.
It is a powerful statement, and it really encapsulates a core belief within the Bitcoin community. Its finite supply, that 21 million coin limit, makes it a uniquely scarce digital asset, a superior form of long-term value storage, at least in their eyes.
Now, the Reddit discussion also touched on something that might make shareholders a little queasy dilution.
Yes.
When MicroStrategy issues more stock, each existing shareholder owns a smaller percentage of the overall company.
Right.
But the counter argument is that they then indirectly own more Bitcoin per share, even if their slice of the original software business shrinks. It's a bit of a mental balancing act,
It's a calculated trade-off.
Yeah.
Shareholders are essentially accepting a smaller piece of the pie today, in the hope that the overall value of the pie, driven by Bitcoin's appreciation, will become significantly larger in the future, hopefully more than compensating for that initial dilution.
And here's where the genius label, as one Reddit user put it, comes into play. It's about potentially exploiting a financial system where borrowing money and issuing shares can be relatively cheap to acquire an asset that's inherently scarce and expected to skyrocket in value.
And that's crucial because it highlights the somewhat paradoxical nature of the strategy. You're diluting ownership to gain exposure to a different asset they believe is fundamentally undervalued by the market. It's about leveraging perceived market inefficiencies, essentially.
But then another interesting angle popped up in that same Reddit thread, the suggestion that maybe MicroStrategy's original software business isn't exactly booming.
Right.
Which is why they've made this dramatic shift towards Bitcoin accumulation as their primary growth engine.
That's a very valid point to consider. I mean, if a company's core business faces headwinds or, limited growth prospects, making a bold move into a potentially high-growth asset like Bitcoin, while it could be seen as a way to revitalize investor interest and find new pathways for creating shareholder value.
Okay, so from this core idea, we move to something they've termed the Bitcoin flywheel. Sounds like something you'd find in an engineering textbook.
Yeah.
The Verdict article and MicroStrategy's own financial reports really explain this. It hinges on their market capitalization, trading at a premium to their net asset value, or NAV. Why is that premium so key?
Well, the premium to NAV is really the engine driving this whole cycle because investors are willing to value MicroStrategy as a whole at more than the sum of its individual parts. Their Bitcoin holdings plus their software business.
Okay.
The company can then issue more of its relatively highly valued stock.
Right. And this leads to the next step. selling these newly issued shares through what they call at-the-market or ATM offerings. Think of it like MicroStrategy slowly selling small chunks of their stock directly to the market over time, rather than one big offering. This raises cash.
And that cash
Is then used to buy even more Bitcoin.
Precisely. And here's where it gets really interesting, right? Because of that initial premium, even though they're issuing more shares, the amount of Bitcoin held per share actually increases.
Oh, okay.
This reinforces the idea that owning MicroStrategy stock gives investors amplified exposure to Bitcoin.
So it becomes this self-reinforcing cycle. More Bitcoin per share attracts more investors, which props up the stock price, allowing them to buy even more Bitcoin. It's almost circular.
Exactly. A flywheel.
Strategy's report even boasted about their achieved BTC yield. Essentially, they're tracking how much more Bitcoin each share effectively represents over time, hitting 11% in the first quarter of 2025 and a whopping 13.7% year-to-date,
Wow.
with a target of 25% for the full year.
Those BTC yield, BTC gain, and BTC gain KPIs, as you said, are their way of quantifying the success of this strategy. I mean, the $5.8 billion BTC gain year-to-date definitely grabs attention.
For sure.
Though it's important to understand how they're calculating that figure. It reflects the increase in the dollar value of their Bitcoin holdings, the paper gains.
Absolutely. And they're not just relying on selling stock, they're also using what they call intelligent leverage through low or even 0% interest convertible bonds to acquire even more Bitcoin.
Right.
These are essentially loans that can be repaid in company stock later on.
Convertible bonds offer a way to access capital with potentially lower upfront costs. The bondholders have the option to become shareholders if the stock price rises sufficiently. It's another way to bet on future appreciation without significant immediate interest payments.
And then there's the issuance of preferred stock, like STRK and STRF, with fixed dividend yields. This seems like another way they're raising funds, but it likely appeals to a different type of investor.
Yeah, exactly.
Those looking for a more predictable income stream, maybe.
Exactly. By offering different flavors of investment, common stock for growth linked to Bitcoin, convertible bonds as a leveraged bet, and preferred stock for more stable income, MicroStrategy can tap into a broader spectrum of investors to fuel their Bitcoin buying spree.
Now let's peek into the thinking behind all of this, the vision of Michael Saylor. His perspective, as he's shared in that YouTube video we watched, is pretty strong.
Oh, yeah.
He labels traditional treasury assets as toxic and champions Bitcoin as the best tech investment and the best alternative investment. Those are some serious convictions.
What's fascinating here is Saylor's belief in Bitcoin isn't just a fleeting bet, right? He frames it as a fundamental and necessary evolution of corporate treasury management. He argues that holding on to traditional fiat currencies will actually erode value over time due to inflation and other, macroeconomic factors.
He lays out his reasoning quite clearly. Bitcoin is uncorrelated with traditional markets. It's global. It's not controlled by any government. It acts as a store of value, and it's surprisingly liquid. Especially when you stack it up against something like physical real estate.
And if we connect this to the bigger picture, his argument aligns with the core tenets of the Bitcoin as digital gold narrative. He emphasizes its decentralized nature and its potential as a safe haven asset outside the traditional financial system, offering a degree of insulation from governmental policies and economic instability.
And he even flips the script on Bitcoin's famous volatility, arguing that it's volatile precisely because it's low risk and highly desirable. That's a head scratcher for a lot of people, I imagine.
It is counterintuitive, definitely. But his logic, as I understand it, is that because Bitcoin has had much of the traditional financial risk stripped away, no reliance on a specific company's performance, no counterparty risk in the traditional sense, its price movements are driven primarily by global supply and demand. That leads to higher volatility, but not necessarily higher fundamental risk, at least in his estimation.
He's also got a really grand vision for Bitcoin, not just as a single asset, but as a whole ecosystem, the Internet of Money, with increasing financialization and widespread adoption by corporate treasuries.
Which raises an important question. Is this genuine conviction driving a long-term strategy, or is it, a narrative built to support their ongoing Bitcoin accumulation?
Good question.
His ambitious long-term price predictions certainly lean towards the former, I'd say.
Indeed. The Street Crypto reported his forecast of Bitcoin hitting $1 million within the next decade.
$1 million, wow.
And a staggering $13 million by 2045. And based on those numbers, he envisions MicroStrategy potentially becoming a $1 trillion or even a $10 trillion company.
A $10 trillion company.
That's a monumental leap from their current market cap of around $117 billion as of mid-May 2025.
The sheer scale of that $10 trillion valuation is quite something to wrap your head around. As the article pointed out, based solely on their current Bitcoin holdings of, 568,840 BTC.
Yeah, about that.
Each Bitcoin would need to be worth approximately $17.6 million. That's far beyond almost all current market forecasts. It's really out there.
It really puts the audacity of his vision into perspective. I mean, to reach that kind of valuation based on their current holdings, Bitcoin would need to become more valuable than almost every asset on the planet, maybe except for all the gold ever mined.
It underscores the extremely high-stakes nature of the strategy. It's not just a bet on Bitcoin going up, it's a bet on it reaching truly astronomical levels.
Now, we also looked at the case for other companies to potentially jump on this bandwagon thanks to a report from Strive Asset Management. They lay out several reasons why companies should be considering Bitcoin for their own treasury reserves.
Right. Strive's report provides a broader investment thesis for corporate Bitcoin adoption. It looks beyond MicroStrategy's specific financial maneuvers to the wider macroeconomic landscape and potential strategic advantages.
They highlight fundamental economic trends, arguing that Bitcoin can act as a crucial hedge against the global debt crisis and the persistent threat of inflation, largely due to its fixed and predictable supply. That's a core tenet for many Bitcoin proponents, right?
Yes, that scarcity narrative is absolutely central to their argument. The thinking is, if traditional currencies are susceptible to devaluation through increased money printing, a digitally scarce asset like Bitcoin could theoretically maintain its purchasing power or even appreciate over time.
They also point to the asymmetric growth potential and Bitcoin's impressive historical outperformance compared to more traditional asset classes. The growth rate charts in their report are certainly eye-catching.
What's fascinating here is they're positioning Bitcoin not just as a defensive play against economic uncertainty, but also as a potential catalyst for significant returns on corporate balance sheets. Like real growth.
Geopolitical instability gets a mention too, with Bitcoin's borderless and neutral nature being presented as a key advantage. In an increasingly turbulent world, that's a characteristic that could hold significant appeal for corporations with global operations.
The idea of a truly global, non-sovereign asset, one that isn't tied to the political decisions of any single nation. It definitely resonates, particularly in times of heightened international tension and economic sanctions.
And then there's the growing wave of institutional adoption. They highlight more and more public and private companies, even some governments apparently, and the rise of readily accessible ETFs.
Right.
It suggests Bitcoin is becoming increasingly integrated into the mainstream financial system. Their data indicated at least 89 public companies held Bitcoin in early 2025.
Yeah, this increasing institutional interest is seen by many as a significant validation of Bitcoin as a legitimate asset class. It could potentially lead to greater liquidity and maybe even lower volatility down the road as a wider range of investors participate.
Strive even throws in the idea of Bitcoin as a hedge against AI disruption, which is really interesting and forward-thinking angle.
It is.
The thought is that companies holding Bitcoin reserves might be better positioned to adapt to and capitalize on the transformative changes brought about by artificial intelligence.
That's a more speculative argument for sure, but intriguing. As AI potentially reshapes industries and the labor force, having a store of value that isn't directly tied to traditional business models or sectors vulnerable to AI disruption, well, it could provide a valuable strategic reserve.
Perhaps most compelling for those in traditional finance is their discussion of diversification benefits. They note Bitcoin's relatively low to moderate correlation with equities, and its almost non-existent correlation with bonds. This could theoretically lead to improved risk-adjusted returns for a diversified portfolio. Their efficient frontier analysis illustrates how even a small allocation to Bitcoin could potentially enhance returns without a significant increase in overall portfolio risk.
Yeah, that lack of strong correlation with traditional assets is a key argument for diversification. If Bitcoin's price movements aren't closely linked to the performance of the stock market or bond yields, it could act as a valuable buffer during downturns in those more conventional asset classes.
And finally, they point to the new FASB accounting rules that allow companies to recognize unrealized Bitcoin gains as income, which Strive believes will further incentivize corporate adoption. This is a significant shift from the previous, more restrictive accounting treatment.
Definitely. The move to fair value accounting, replacing the old impairment-only model, means that companies will now reflect both the gains and losses in Bitcoin's value directly on their income statements each quarter. This newfound ability to potentially show positive earnings from Bitcoin holdings could indeed make it a more attractive asset for some corporate treasurers.
Of course, it's not all smooth sailing. There are definitely some significant risks and criticisms surrounding MicroStrategy's approach, as highlighted in those articles from Verdict and Brave New Coin.
It's essential to maintain a balanced perspective here. While the potential rewards are considerable, the inherent risks associated with such a concentrated and highly leveraged bet on a notoriously volatile asset, well, they simply cannot be ignored.
One major worry is what happens if that premium to NAV just evaporates.
Right.
If investors no longer see an advantage in holding MicroStrategy shares compared to just buying Bitcoin directly, that whole Bitcoin yield mechanism could crumble, couldn't it?
Yeah, absolutely. That premium is fundamentally based on market sentiment and the perception of MicroStrategy as a unique vehicle for Bitcoin exposure in the public markets. If that perception changes, maybe due to a big drop in Bitcoin's price, or the increased availability and appeal of direct Bitcoin ETF,
Yeah, like the ones we have now.
the rationale for that premium weakens considerably, and the flywheel could indeed stall or even reverse.
The dangers of taking on so much debt through those convertible bonds are also a big concern. A sharp and sustained drop in Bitcoin's price could leave them struggling to manage their debt obligations. We saw a taste of that kind of volatility back in 2022.
Leverage acts as a double-edged sword, always. It amplifies both potential gains and potential losses. While it can significantly boost returns when Bitcoin's price is climbing, it can also magnify the financial strain during downturns, potentially leading to a very precarious situation if debt payments become difficult to meet.
Then there's the really serious Ponzi scheme accusation that some have leveled against them.
Oof, yeah.
The argument is that they're simply issuing more debt and equity to buy Bitcoin, which artificially pumps up its price and their own market cap, allowing them to raise even more capital, a cycle that's completely reliant on Bitcoin's price continuing its upward trajectory.
That's a critical viewpoint that questions the underlying sustainability of their model. If the price of Bitcoin were to stagnate or, worse, decline significantly, the ability to continuously raise capital and maintain that cycle could be severely compromised. It's a valid concern.
And the most obvious risk, really, if Bitcoin just plateaus or, even worse, experiences a major crash, the entire financial structure they've built could be in deep, deep trouble.
The very strong correlation between MicroStrategy's stock price and the price of Bitcoin underscores this fundamental risk. Any substantial downturn in the cryptocurrency market is highly likely to have a direct and potentially severe negative impact on the company's valuation. It's almost a given.
We also can't overlook the volatility of MicroStrategy's stock itself. It's been on a real roller coaster, mirroring Bitcoin's dramatic ups and downs. As the Verdict article pointed out, it's definitely not an investment for the faint of heart.
No, investors in MicroStrategy are essentially taking on a leveraged form of Bitcoin exposure, which inherently comes with a higher degree of price volatility compared to simply holding Bitcoin directly. You have to have the stomach for it.
And as highlighted by the CFO Dive article, MicroStrategy reported a substantial unrealized loss. What was it? $5.91 billion on their digital assets in the first quarter of 2025.
Wow, yeah.
This was a direct result of a dip in Bitcoin's price towards the end of the quarter, combined with the implementation of those new fair value accounting rules. It really shows the immediate impact Bitcoin's price swings can have on their financial results.
The adoption of ASU 2023-08 is, like we said, a double-edged sword. While it now allows for the recognition of unrealized gains, it also mandates the reporting of unrealized losses, leading to potentially significant swings in reported earnings from quarter to quarter, as clearly demonstrated by that large unrealized loss in Q1, makes the numbers jump around a lot more.
However, it's also crucial to remember, as the CFO Dive piece also pointed out, that the adoption of fair value accounting actually resulted in a significant $12.7 billion increase in their retained earnings at the beginning of 2025.
That's right.
So it's a really complex picture with both positive and negative accounting implications. It's not straightforward.
It is a complex accounting shift. It provides a more transparent view of the fluctuating value of their Bitcoin holdings, certainly, but it also introduces a new layer of volatility into their reported financial statements.
Finally, let's briefly touch on MicroStrategy's actual financial performance in Q1 2025, looking beyond just their Bitcoin holdings. Their report gives us some insights into their core software business.
Yeah, Examining their core business operations provides important context. While the Bitcoin strategy grabs all the headlines, MicroStrategy still has its original software business to consider. The reason it existed in the first place.
Interestingly, while their total revenues saw a slight dip, their subscription services revenues showed a notable increase. That suggests there might be some positive traction in that segment of their business, perhaps.
The growth in subscription-based revenue is generally seen as a positive indicator, yeah. It suggests a move towards a more stable and recurring revenue stream for their software division. That's usually good news.
But then you look at their operating expenses, and they were substantial, largely driven by that big unrealized loss on their digital assets we just mentioned. And ultimately, they did report a net loss for the quarter.
The significant impact of Bitcoin's price volatility on their bottom line is clearly reflected in those figures. The unrealized loss on their Bitcoin holdings just outweighed any potential gains from their core software operations during that period.
On the capital markets front, though, they successfully executed that massive $21 billion at the market common stock equity offering.
$21 billion.
And those two preferred stock IPOs. They're clearly very active in raising capital, still finding willing investors.
Their ability to tap into the capital markets on such a large scale really speaks to the continued investor interest in their narrative, doesn't it? Even amidst the inherent volatility of their strategy, people are still buying in.
And they even increased the number of authorized common and preferred stock shares, giving them even more runway for potential future fundraising. Plus, they also redeemed and converted their 2027 convertible notes.
Right, that redemption and conversion simplifies their capital structure somewhat and removes a significant near-term debt obligation, tidying things up a bit.
So to bring it all together, MicroStrategy's Bitcoin strategy is undeniably a bold and highly leveraged wager on the long-term appreciation of Bitcoin. They're not just passively holding, they're actively employing a range of sophisticated financial tools to accumulate as much Bitcoin as possible.
It's a strategy that is deeply intertwined with Michael Saylor's profound personal conviction in Bitcoin's future and his, expansive vision for its role in the global financial landscape. You can't separate the strategy from the man, really.
And the potential for truly massive returns is certainly there if Saylor's optimistic price predictions for Bitcoin come even remotely close to materializing. MicroStrategy could indeed, in that scenario, become one of the most valuable companies worldwide. It's a huge if, but.
However, the inherent risks are equally substantial. The extreme volatility of Bitcoin, the significant reliance on leverage, and the fundamental dependence on Bitcoin's continued and substantial price appreciation. These are all critical factors to consider. Expert opinions on the long-term viability and sustainability of this approach remain sharply divided. No consensus here.
So for you, our listener, who is curious about the inner workings of this strategy, hopefully this deep dive has provided a much clearer understanding of MicroStrategy's unique approach, the rationale underpinning it, and the ongoing debate surrounding its potential success or failure.
And this leads us to a final thought to ponder. As more corporations begin to explore the possibility of incorporating Bitcoin into their treasury strategies, maybe dipping a toe in the water, are we witnessing the early stages of a fundamental shift in corporate finance?
Or is this a high-stakes gamble that only a select few, with a very specific risk appetite like MicroStrategy's, can realistically execute?
Yeah. What does this emerging trend ultimately tell us about the evolving role and significance of digital assets within the broader global economy? Something to think about.